Hi guys, and welcome to this week's edition of our weekly forecast. This is where we're going to be looking out on what to expect in the upcoming week in the markets and how we can be able to capitalize on the forecast. So first things first, we're going to look at dollar index, which is always the case. We need to know what the dollar index is doing in relation to the other assets. So for your own analysis that you have to do on your own, make sure you know what dollar index is doing before you make any decision if you are trading majors and assets like gold and oil. So looking at dollar index, from last week I was expecting further weakness to come into the dollar, but it so happened that we had a correction to the upside. We had a bit of a recovery to the upside, but at the end of the week you could see we had a clear rejection of higher prices here, meaning the sellers here and here, by end of last week, they literally took control of the market. And now I want you to take note of where last week's closing price was. Last week closed at 99.76. That is below the high of this bearish order block, which eventually saw a huge push to the downside in February. So now if you look at last week's price action candle, it closed below the high of that bearish order block. That in itself gives me confidence that we are going to see lower prices coming into dollar index. You see, I would expect lower prices coming into dollar index, also being fulfilled by these sellers here who pushed market 2 weeks ago to the downside. And you can clearly see we've got a good bearish engulfing candle from 2 weeks ago, which engulfed this candle and this candle, and then market pushed to the downside. And then last week we had a small appreciation in value on dollar index. It pushed all the way up. It cleared the bearish engulfs high but closed below. So clearly we had a stop hand price manipulation there. That was liquidity engineering, short liquidity engineering. So expecting market to fall to the downside. So now that's the look out on the weekly chart. We can clearly see on the weekly chart that we are in a bearish weekly order flow where we have to expect price to push to the downside, first to the 98.80 zone and all the way to the 98.40 zone. So we are in a bearish weekly order flow. That means I'm expecting weakness to come in to the dollar index. So now let's look at daily chart so that we see what the price action looks like on a daily chart. You can clearly see how price rejected the 180 price zone. First here, market pushed to the upside. Those two bullish candle on a weekly, but it couldn't sustain the bearish engulfing high. Market pushed to the downside. We had another rally into the supply zone, which is coming in here. See, we've got this supply zone here. Price rallied, rejected, market pushed back again to 98.80 zone, and then we had market last week push into this supply zone, almost like mean threshold. This candle traded almost 50% of our supply zone, and market rejected and pushed to the downside. Can you see where last week's Friday close rejected from? It rejected, it dipped down into 99.50. 99.50 zone is coming in on this daily demand. You see here we've got a daily demand which managed to reject price. You see, so you need to take note of that price action when you're doing your analysis. Take note of this bullish engulf on a daily time frame. This is gonna offer short-term push to 100.40 price zone. You see, so price could push up here into the 160, 180 price zone before you start hunting for short trades. But if it opens and closes below, then expect market to push all the way to 98 price zone. This is the move that I'm anticipating. I'm expecting market to push to the downside. The moment we close below these last down candles, right? The moment we close below those last down candles, then expect market to fall all the way to the 98 price zone, or even further to 97.20. You see, so I'll be expecting weakness coming in to dollar index. So now let's see what that looks like on our H4 chart. Now you can clearly see how the moves is panning out. You see, now on H4 I want you to take note of these price zones. You must mark these zones on your candle so that you focus on those price zones. I want you to mark out, firstly you need to mark out this is a H4. You need to mark out the you need to mark out the 100 and 100.14. we are on a H4 chart. Okay, let me do this. Okay, I'm gonna make it thicker so that we know which zone are we looking out for. So it's 114, right? You see that price area, this is the supply zone. So expect market, if market does retrace to the upside, right? If we do get appreciation in value, 100.14 is gonna offer us better chance to short the asset with our stop loss above this high here. You see, this is where you're gonna put your stop loss. So this supply zone is gonna offer better chances for market to go to the downside, right? That is if market corrects to the upside. If market doesn't correct to the upside, you see this candle, that's a bearish engulf on an H4 chart. So market can retest this area here, which is coming in at 99.80. The 99.80 zone, you can expect market to push to the downside. Thereby you need to place your stop loss above the high of the bearish engulf. So now let's see what that looks like on a H1. Let me just zoom out a bit. Right, on an H1 time frame. Now the bearish the second bearish engulf on H4, you see here there was liquidity void. Market has already retraced to close the massive drop in price, right? So that's a new supply zone that we have to anticipate price to push to the downside, right? If it close and break above the high of this impulsive move to the downside, then wait for price to reach for 100.140 for you to start hunting for short trades. You see, you have to be patient. Don't rush the market when it's in no man's land, like in these zones here. You see, don't rush. You see, you must wait, be patient, read the price action, take note of the levels that you are looking at. You see, don't worry about the market in this zone here, right? Or in this range here, because you'd have already missed the entries, you see. And if you start looking at the price or entries into those ranges, that's when you get burned. So you must be really careful. So now I'm expecting price to come back, test 99.80. It can retest, or it can open to the downside with a gap to the downside and further weakness coming in, you see. So I'm expecting the effects of that report that came out on Friday. Remember, we had NFP on Friday. The effects of that report, they will be felt in the coming week, you see. The effects of those 20 million job losses that were announced during NFP on Friday, I'm expecting the effects of that to come back into the market in the coming week. So that is the forecast on dollar index. I'll be expecting bearish moves to the downside, expecting further weakness to come into the dollar. So your targets need to be like around 99.50 or all the way to 99 price zone, whereby we might eventually close this gap here, which was left open from last week's opening price. Now, also looking at the CFTC COT report, dollar index, the commercials, they are extremely short on dollar index. They're almost like 90% short on their outlook for dollar index. And if we look at the non-commercials, they've been taking profits on their long position exposure, you see, meaning they're cutting off their exposure to the upside on dollar index, you see. That's another nugget for you, so that you have to have information that can support your decision. The numbers that I've just told you, the non-commercials taking off profits, like from last week, they took off positions close to almost close to 2,000 positions off from last week's COT number. And then the commercials, they increased their exposure on dollar index by close to almost 5% from last week's number. So that outlook does support that we're gonna get further weakness coming into dollar index. Now, how then are you gonna be trading assets like USD JPY and Euro USD? Remember guys, I only do these three assets mainly. At the moment, gold is on the side. I'm not focusing on what gold is gonna be doing for reasons that I cannot disclose at the moment. But for gold, for Euro USD, USD JPY and dollar index, yeah, I'm focusing on those things. And those guys in the mentorship, you know already what to do on the other assets like USD CAD, USD CHF, NZD USD, AUD USD. That is if you trade those assets. So now, how then are you gonna be trading? Let's start with USD JPY. I'm gonna go straight to an H1 time frame so that I highlight to you like areas where you need to look out for entries. Since we are bearish on dollar index, right, that means we are also going to be bearish on the yen. USD JPY, we have to anticipate short trades. We have to anticipate moves, strong moves to the downside. But now, strong moves to the downside on the yen, what will be the target? We'll be targeting the 106.27, 106.27 or 106.33. You see, 106.33 and 106.27. That range there will be your target, either from current price action, right? From current price action, if you're that much of an aggressive trader, when market opens, you can short with a target to 106.33 or 106.27 range. Or for your entries to the downside, wait for market to retest 106.93. This is gonna offer better chance to short the market to the downside, you see. So the 106.93, you see these levels, guys, that I'm highlighting, I've already mentioned these levels from last week, so you should know that these levels, we've marked them from last week and they're still there because they will help me in not forcing my trades. I have to wait for the level to get hit. So that's for USD JPY. So anticipating short trade opportunities from 106.93, or if market test this high here, this high is coming in at so we've got opening price of 106.84. you see 106.84, or 50% trade into this supply zone here on H1. you see 50% into this. If price retest 50% into the supply zone here, yes, you can place your short entries to the downside with your stop loss above these two equal highs. you see long-term short entry, you're looking at 107.13 or 107.17. This is for those people who are conservative, the ones who are not too aggressive with the market. They'll literally wait for this level here. That is if market comes back, because this level is going to offer sure trades, like trades whereby you can risk a bit more to the downside. So that's much about the USD JPY. Now looking at Euro USD, and since we are bearish on dollar index, we are going to be bullish on Euro USD. Now from which level should we anticipate long entries to the upside, right? Remember guys, Monday's trading range helps us to determine where we have to anticipate price to go to, right? Yes, it can happen in many cases that the market can just open and then rallies and never looks back, right? You have to accept that opportunity is past, right? But normally during Monday's range and Tuesday's Asian range, you did expect market to trade lower. That is if we are in a bullish weekly order flow, like what we are now on Euro USD. We're in a bullish weekly order flow. So I would be expecting market to clear up the liquidity down here, right? So looking at the price action, you're looking at 1.080 is going to offer opportunities to go to the upside. 1.080 is going to offer us good opportunities to trade to the upside, or 50% retracement into this down candle here. You see the one with the big body, right? The one that opens at 107.79. That's the same price range, 107.80, guys. So 50% comes in around 107.78, right? So that area there is going to offer us opportunities to trade the market to the upside with the target where these highs here, there's liquidity here, and these two highs here. This will be your target. So if you are to enter the market around the 108 price point, then expect market to move all the way to the upside, because remember, we'll be expecting appreciation on Euro USD. So you'll be expecting market to rally. This will be like literally your first target on USD JPY, Euro USD, sorry. If you do enter at 50% retracement of this bullish order block here, see, which is a strong demand area. Can you see all the price action that I'm telling you, the price points that I'm telling you guys, they're in this hourly demand zone which was created here. So if price does dip down there, I would be expecting market, whoever bought here, the institutions that loaded their long positions here, I would expect them to hold the price, meaning your stop loss has to be way below here. You see, right now, if your platform, those on C Trader, if your platform accepts you to open like pending orders, you can pen the buy limit order here with your entry at 1.08, then your stop loss way below 1.076 with targets at 1.087 or all the way to 1.0 So that is all about it for this upcoming week, guys. So we are bearish on USD/JPY and dollar index, and then we are bullish on Euro USD. So I'll be looking for long positions on Euro USD. I wish you good luck and happy trading, guys. Thank you.